Hi, and welcome to Markets Rally. I am Robert, and this is
Sam. So we have a fresh vibe going on here. We have lights, mixers, cameras, and that's because we're doing some really serious work, Rob.
Are we, Sam?
Yeah, of course. So there's a lot of things happening in the tech industry, in the financial markets, in the global economy, and we're here to get to the bottom of it. We're going to be scrolling through the web, looking for articles, and actually breaking them down for you.
Thank you, Sam. Let's start with Apple.
So Apple's stock dips and Verizon's recovers during the iPhone event.
And?
Have you been living under a rock? So the Apple iPhone event was held a couple of weeks ago, and I was there.
Wait a second. What do you mean you were there?
Yeah, I was there. So it was in Apple Park. And, I wasn't physically there, but I felt like I was there. The Apple cinematography was incredible.
I understand now. Okay.
They put on such an amazing show. The transitions just... Let me see if I can... Look at that. Wow. That's incredible. So the event was held a couple of weeks ago. We saw 4 new iPhones. We saw a HomePod Mini. And we saw a few new accessories, including the MagSafe. And obviously the main part of the show, the iPhones, has some new features. We have new cameras, which with huge advances in low light. For example, the 12 Pro can now film with 87% better quality in low light, which is incredible. The Pro versions also shoots videos in Dolby Vision, which is the first in any camera. I'm not just talking about phone cameras, in any camera.
Oh, wow.
So that's incredible. And that means just you get 60 times more color in what you film. It's really, really great technology, because what normally would happen is the video would get filmed, in terms of professionally, with professional cameras, videos would get filmed and then the Dolby Vision gets applied in post-production. But what we've seen with the new iPhone 12 Pro, the 12 Pro Max, is you can now capture, edit, and the playback using Dolby Vision, all in your pocket.
Oh, wow.
It's incredible. And also we saw the introduction of the LiDAR scanner, the LiDAR scanner sensor, they call it.
Can you explain what a LiDAR sensor is?
So the LiDAR sensor basically measures how long it takes for lights to reflect back from objects in a room. And it does it all in the space of seconds. So this new technology is going to be really good for decorators, for architects, and that's going to be. I think if you're an architect, you need this device. It's going to be really great. We also saw the all new design with the flat edges, going back to around the iPhone 5 age. That's really cool.
That does look good.
Yeah, it looks great. We have 5G as well, which is the 5th generation wireless networks. And that boasts super fast speeds. For example, with the new iPhone, you can now, if it reaches the 4 gig potential, you can actually download a 4K film in 40 seconds. It's really incredible. But hold your horses, Rob. Don't get too excited. Calm down. Of course, 4 gig download speed is, in theory, that's the potential reach. You would only really get that on millimeter wave, ultra wideband, and that's not yet available in the UK. The UK's network is actually built on sub-6, which is not as fast, but according to some analysts testing the device, you should get speeds of around 150 megabytes to 300 megabytes, which is still about 10% more than you get on the 11 with the 4G. But of course, if you get to that 4 gig of download speed, you'll be looking at 100 times more. So that's mad. So let me go back to the article. Of course, speaking of 5G again, so Verizon's CEO popped in for a chat. And who's best placed to market the 5G technology than him? And immediately he walked on the stage. You can actually see the market reaction for Verizon. You can see it just skyrocket.
Why is that, Sam?
Well, because it was a surprise, Rob. It was a huge surprise. It hit everyone in the face. It was a good marketing platform for Verizon. So I think that you saw the stock value go up straight away when he popped onto the stage.
That sounds really good, Sam, but why did Apple stock fall?
I don't know, man. What are you asking me? You're expecting that way. To be honest, I think the main reason is because I think all the features that we were expecting were leaked before the event. So we were expecting the 5G, we were expecting the no charger in the box, we were expecting the new cameras, the LiDAR sensor as well. So there was no surprises for Apple. It was surprising to see Verizon on the stage, but we weren't so surprised to see Apple. I really think that if Apple came out with the 120 hertz display, if we saw a reduction in the notch size, I think that will have been huge. Just to cover the 120 hertz display, it just means that the screen refreshes 120 times a second. So normally we have 60 hertz on the old iPhones. Even currently we have 60 hertz as well, and that's 60 times a second. If we have 120 times a second, things just feel a lot smoother, a lot more lifelike, realistic. So I was quite disappointed we didn't have that. Really disappointed because we have it on the Samsung devices, the latest Samsung devices. We have it on the latest OnePlus devices. We had it on the Razer phone in 2017. So it's they're really, really lagging behind in my opinion here. But that's not what they think in China. So I've got an article here actually. Let me get it up. So TF Securities analyst Min-Chi Kuo estimates China will account for up to 40% of global demand for the iPhone 12 Pro. They actually love the 5G in China. So Min-Chi Kuo actually attributed China's strong appetite for the new phones to growing 5G infrastructure in the country, as well as the demand transferred from Chinese smartphone giants Huawei Technologies, which is facing chip supply shortages due to US sanction. So these are quite interesting.
Sam, do you think that China's recovery has to do anything with that?
Slow down, Rob. I feel, to be fair, the Chinese economy has recovered really, really quickly. The stock market has rallied. The currency has appreciated recently as well. So yeah, of course that means people are more confident. So I would say it does play a role. But 5G I would say plays maybe a bigger role because we all love Apple. Okay, speaking about
other fruits.
and other fruits, yeah. Okay, speaking about the iPhone, we have our first Apple iPhone 13 leaks, which reveals a smaller notch, ProMotion display, Touch ID. Wow. You know what I think, Rob? I think this is I think the Apple celebration cycle is basically never ending. We've obviously just had the iPhone 12 Pro come out, the Pro Max, the other two phones as well. And straight away, now we're talking about the iPhone 13, what it's going to look like.
Isn't that a bit too much?
No. I'm
13,
loving
14, 15. Where is it going to end?
I don't want it to end. So we have industry insiders, John Prosser, Ice Universe, Ross Young. They all reviewed that the iPhone is set to make the design and display changes everyone wanted for the iPhone 12. You recall I was talking about the 120 hertz display. Well, this year we're going to see with the iPhone 12, we saw an incremental update, and it looks like things comes to those who wait. Next, we're going to talk about tech stocks driving the market. So over the past decade, we've seen astronomical increases in the stock price of all these technology stocks. And why, you're asking me, Rob? Well, that's what you're thinking.
Yeah, you're reading my mind.
So companies are actually valued based on future value, their market share and their popularity. And a lot of these tech companies as well, what they do is they reinvest profits into the business, into products, into innovation to improve their products. So that's what's caused the growth over the last 10 years.
The growth has been even more stronger since the pandemic.
Okay.
Let's take a look at a chart, Sam. On the Financial Times website, let's create this chart. Let's just plot S&P 500.
Okay.
Let's plot Nasdaq. Let's go with Netflix and Apple.
Yes,
Yeah.
Apple get them in there.
If you look at the chart, you can see that both the Nasdaq Composite have outperformed the S&P 500 since the pandemic.
Okay.
The S&P has growing by less than 20%, Nasdaq around 40%, and both Apple and Netflix are above 80%. This Yahoo Finance article, why are stocks outperforming the market, looks at the reasons why these technology stocks have growing so fast since the pandemic. Tech platforms like Zoom and Microsoft Teams are flourishing. They support these struggling companies in these unprecedented times by providing easily managed digital platforms to make staying connected with co-workers and customers simple, which is why we have seen Zoom's share price increase by a staggering 300+% from March to September. The second reason is increased levels of media consumption have been a driving force as well. I myself have a Netflix subscription.
Slow down, Rob. You're getting a bit excited again. What have you been watching on Netflix?
Mostly documentaries. I never had a Netflix account.
Oh, wow.
I have created one. And I mean, why not?
Why not, man? You gotta live a little. You know?
I have to treat myself. Another reason is that growth is not limited to actual performance, but rather future potential and profitability. This is what you talked about. Look at this point. Traders transitioning from bearish to bullish. Everyone is seeing tech stocks in particular rally. Thus, many investors believe they are buying these stocks at a relatively cheap price.
Wow.
That does make sense because when you look at the low interest environment we are right now, people are willing to pay a higher price for these earnings. And another point is that additionally, emotional, non-fundamental retail trading is inflating stock market propped up by stimulus and brand recognition.
Emotional? Is that like me with Apple?
Emotions do play a big part in the stock market.
The thing is, are these stocks actually then overvalued? Because you're telling me, but some people are becoming emotional looking at the brand recognition. Are they? Is there a possibility that these are overvalued?
Let's look at a article provided by the Morningstar.
Okay.
They actually have a valuation metric.
Wow, you've got a few great articles in here. Yeah.
Yeah. So they use something.
You were expecting that question. Okay. Yeah.
They have something called the price fair value ratio, and they have this metric since January 2007.
Okay.
The Morningstar fair value estimate, which feeds into the star rating for stocks, strips out market sentiment and looks at the company fundamentals such as cash flow, debt, and profits. Let's take Apple, for example. Do you think it is overvalued?
Very much undervalued. 100%. Come on.
Well, actually, based on Morningstar, the fair value of Apple is 71 and it's currently trading at around 112. It's a premium of 37%.
Really?
Yeah. I'm sorry to say so.
Okay.
I mean, but look at some other stocks.
Wait,
which one do you want to
is
look
Tesla
at?
on there?
Yeah, Tesla is on there.
I feel like Tesla's overvalued. Is that right? I feel like they are. Just it seems like their stocks are always rising.
The fair value that Morningstar puts on Tesla is $173
Okay.
per share, and actually, it's currently trading at around $440.
Wow.
That's a 61 premium. It's one of the most overvalued companies.
Just as guess. I know my stuff, you know. I know my stuff. Yeah, I would guess that. My question is, are we seeing the .com bubble again? Are we seeing is this just a reincarnation of that?
Well, .com bubble was a rapid rise in US technology stocks. Stock equity valuations fueled by investments in internet-based companies during the bull market in 1990s. And between 1995 and 2000, the Nasdaq Composite went from 1,000 points to 5,000 points.
Okay.
And in 2001 and 2002, unfortunately, the bubble burst. Investors basically ignored the fundamentals and invested in these companies which everyone thought they had a bright future because they were so optimistic about internet.
Everyone was on the clouds.
Yeah, but it turned out not to be the case. But we have to take a different approach to the tech valuations now, because these companies are well established.
Yeah.
Look at Apple and Amazon. Amazon is one of the companies that survived the tech bubble, the dot-com bubble in 2001 and 2.
You know what, Rob? I have a huge problem with these companies. For me, the problem is the abuse of power that we're seeing recently. So I've been reading a few articles, and I've been seeing they're under the microscope basically for abuse of power dominance. They're holding a large proportion of the market, and it's obviously sad for new entrants. And I've got an article here, and it says that U.S. lawmakers detail big tech market abuses and press for strict reform. In terms of causing abuse of power, they do it through killer acquisitions, oppressive contracts to squeeze profits. They copy smaller competitors and produce better offerings because they obviously have the ability to do that with the financial backing. And they also operate and compete in the same market. So, for example, with Amazon, they obviously own the Amazon website, but they also, as well as allowing individual companies to list items on their website, they also have their products on the website as well. So they're basically competing in the same market as well as operating the market. And obviously, you know what that can lead to. It means that if a product is performing well, Amazon can basically replicate it if they want to, if it's possible, and promote it in a way. And that's a possibility. That's something that should be considered. You saw companies like Facebook buying up rivals like Instagram early on in 2012. And again, Instagram was so small, and Facebook saw, compared to now, and they saw the potential there, and they thought this is the best time to invest. And again, that's dominating the competition. Not great for individuals. But actually, there's legislation being worked on now for this. So the U.S. House Committee is currently looking into the abusive markets and recommends lawmakers to introduce legislation prohibiting companies from operating in the market that they compete in. So I think this is probably directed to companies like Amazon. And actually, I feel like I need to tell you a story, Rob.
Go on.
I feel like I want to tell you a story about a day in the life of Sam. I feel like this is key to explain actually what's wrong with competition, why I feel so passionate about this. So, you know me, I go to bed.
Yeah, like everyone else.
Yeah, like everyone. I go to bed. I wake up in the morning.
Yeah, like everyone else.
And like everyone else. And believe it or not, first thing I do is I go to the gym. You know?
I believe it, Sam.
Yeah.
I see you.
Yeah, I go to the
because
gym.
I live next door.
I go to the gym, and I go jump on a treadmill. I might go on a quick high incline.
Yeah.
Do loads of steps on there. And then I might jump on the cross trainer. I don't know. It depends how I'm feeling, Rob. I might even go try some weights. I don't know. So I do all of that.
Do you have like a plan before you go to the gym, or you just go in?
I just go straight in. I just go straight in.
Okay.
Get straight in there. No plans. I'll see where the gym takes me. Is what they say. Finish with the gym.
Yep.
I go to my room, and I might read a book. So I'll pick up a book. I'll read a book. Currently reading Misbehaving, Richard Taylor again, because it's that good. Read a book, and I'm reading this book, going through the pages, and I get a bit peckish, Rob. I get hungry.
Yep.
I'm thinking, I might need to pop to Tesco.
Yeah, buying something healthy. Yeah.
Well, I don't know. We'll get there.
You're just being to the gym.
We'll get there.
You're just being to the gym.
I've been to the gym because it means I can balance the calories now, Rob. So go to Tesco, and I am really craving a Kinder Bueno. That's not healthy.
So
bro.
why did you go to the gym in the first place?
I'm balancing it out. I go to Tesco. I look around. I'm really interested in the Kinder Bueno. I've been craving it since while I was reading the book. And I pick up my Kinder Bueno. There's only Kinder Buenos there, and I leave.
Yeah, like everyone else.
Scenario 2. Scenario 2.
Is there a scenario?
There's a second
too?
scenario.
Okay.
This time I go to Tesco,
Yeah.
and instead of just seeing a Kinder Bueno, because last time it was just all Kinder Buenos, I actually see Snickers bar, Mars bar, Bounty. I probably wouldn't go for that. I see all these different ones.
I like Bounty.
I see all these different chocolate. And this time, maybe I go for a Snickers bar. You know what that means, Rob?
Mixing it up?
That means choice.
Okay.
That means choice. And this is what I want. And that's what you call it. We call it choice. So this is why the committee are focused on bringing choice to the people. You can't blame them. Okay, so let's move on to the next discussion. How are we going to talk about the global economy, financial markets, without talking about the US election?
You're right,
Sam.
Sam.
It
Yes.
just doesn't make sense. So I'm going to give you a quick breakdown. I've got the Financial Times tracker here. You know, we have Donald Trump and Joe Biden. So these are the two candidates.
Yep.
They each need 270 electoral college votes to win the election. Most states are solid or leaning in favor of one of the candidates, but in some states it's really close to call. We call these states the swing states. Swing states. It sounds cool. And that's what they use in America as well.
Yeah.
We don't know who's going to win. The Financial Times tracker predicts a narrow win for
But-
Biden.
Biden is quite far ahead. They call it the blue wave.
Wow. That's an interesting way to describe it. Yeah, he is quite far away. I think the Financial Times is saying he's predicted to get 279 seats, either solid or leaning. And then
And how many do you need to win?
270. So you're thinking he's won already? No.
But this is
just a poll.
Yeah.
This doesn't decide the presidency, Rob.
That's what I was just about to say.
Yeah, he's won. No.
No.
This is just a poll. The presidency actually gets decided on November the 3rd.
Yeah.
Well, that's when the votes come in.
That's Tuesday.
Yeah, so that's
Next week.
quite
Yeah.
soon. So what is going wrong for Trump? That's what you're thinking. I can read your mind, Rob. So what's going on for Trump? It seems like he's probably lost his mojo a lot with the elderly people. I think it stems from his handling of the pandemic. Some of the elderly might feel he really doesn't care too much about them. He's trying to open up the economy really quickly. So I think that's one thing.
Yeah.
And also, it looks like his handling of the Black Lives Matter protests wasn't great either. So these things are affecting a potential Trump win. We also see that Biden has a huge lead with the Latino voters, which is a growing demographic among the swing states as well. We're talking about Arizona, Florida.
Yeah.
So he's doing well there as well. So it looks like we might get a Biden win, but it's just too close to call. We can't say right now. It's just too early.
Yeah, I mean, let's look at the Forbes article. The 3 ways the contested result can impact the elections.
Tell me.
The first scenario is that we have a backlog of counting the mails.
Well, how does that influence anything if there's a backlog?
It takes longer to announce the president.
Okay.
If this takes 1 or 2 days, there's going to be a negligible impact on the markets. That's what the analysts say. But if we have the second scenario and we have a close election, markets could plunge by 5 to 10%.
That's huge.
But that's what actually happened in the last contested election in 2000.
Oh, okay. I'm guessing you're talking about Al Gore Bush.
Yes, that's right, Sam.
Yeah.
If you look at this graph from the Financial Times, you can see that the market has fell around 8% since the election day result, which was contested, until the Supreme Court
Wow.
made Bush the president. So if that happens, markets could experience a fall.
And you can't really see Donald Trump saying, well, it was close, but I'll give you the win this time, Joe. You can have that. You can't really see that happening, right?
No, I mean, he's already expressed his opinion that he won't let Biden win.
Wow. I'm not leaving.
You know what? I'm not leaving. I'm not leaving. I'm not leaving. The show goes on. This is my home.
Let's look at the final scenario. This is characterized by the disruptive legal or legislative battle.
Okay.
This is actually the worst scenario and could lead to market correction of 10% or more. But it is the least likely of the three. What would happen if Trump wins? What would happen if Biden wins?
Ooh,
Should we look at that?
Yeah, let's have a look.
So let's look at this article by the Financial Times. First of all, a Trump victory with a divided Congress. That would mean that the status quo is maintained. That's what is happening right now.
Okay, so no changes then.
There will be little change in markets, and what matters is the size and timing of additional stimulus. That is what has been moving the market so far. There has been a lot of disagreement between the Nancy Pelosi, the Speaker of the House of Representatives, and Steve Mnuchin, the Treasury Secretary.
What happens in terms of China as well? The tensions with China, is that going to continue?
So what we have over the past 2 years is likely to continue, and it's likely that Trump will take more aggressive stance because it would be his last term, and he knows that he has the support of the nation if he wins these elections.
Yeah. Well, enough about Trump. How about if Biden wins?
On the other hand, if Biden wins, and let's assume that he wins the Senate from the Republicans, and this is what actually polls predict.
Okay, well, he's going to win. Well, he already has. Democrats already have the House.
Yeah.
So he's going to win the Senate. Wow.
Let's assume that happens.
Okay.
And we would likely expect increase in corporate tax rate. You know, Trump has decreased the corporate taxes from 35 to about 21%, I believe, and Biden is likely to increase corporate taxes. There's likely to be fairly radical changes in legislation as well. Focus on antitrust laws, antitrust measures.
Oh, is that the dominate?
Yeah.
My Snickers bar.
Yeah, you're going back to your story.
Yeah,
that's right.
I need my Snickers bar. So this would fix all my problems. While in America, if I moved there, yeah.
Yeah. But these companies are worldwide, so his policies could impact the world. Although we have a really pessimistic view on business if Biden wins, if we look at historically, markets have done better on the Democrats.
Wow.
Yeah.
That's unexpected.
Yeah. Sam, if you were investing in for the long term, what would you do?
Put me on the spot here.
Yeah.
But to be honest, I think the market's too volatile. I'll probably just sit back.
Yeah, and that is exactly right, because the study from fund manager Vanguard finds that the impact of elections on returns in financial markets is statistically negligible over the past 150 years.
Next up, the safest dilemma.
You shouldn't be laughing about it. It's a serious topic.
Okay, all right, yeah. Let's put my serious face on, Rob. So, low interest rates leave savers with a few good options. So, I actually included this article because we've seen record low base rates in the UK.
Not just
it's
all
around
over the world. Yeah,
you're right.
Yeah.
It's around the world. And I know what you think here, Rob. Why are we seeing record low base rates?
Go on.
Go on, just ask me the question. You know, I'll let you ask me the question.
Why do we see base rates at very low levels?
Well, I'll tell you, Rob.
Yeah, go on.
Yeah, I'll tell you.
I'm listening.
So we've seen a long-term decline in the inflation rate across the globe. So interest rates are generally used by the central banks to manipulate the inflation rate. So sometimes we'll see expansionary monetary policy in terms of interest rates if the government want to boost economic growth. So you see lower interest rates to then boost economic growth, and ultimately we'll see an increase in inflation towards the target rate. In the UK, that's 2%. So we've been seeing a steady decline in inflation rates over time, and as a result, we're seeing a reduction in interest rates.
Yep.
And obviously, I know you worked in the Office for National Statistics and in the pricing team, so you should have a lot to say on this, Rob, right? Okay. Yeah.
Let's not put me on the spot here.
Let's move on. So currently the UK inflation rate is 0.7%, and obviously to boost the consumer demand and increase inflation towards that 2% rate. Problem is this, Rob. There's a big problem.
Go on.
So these low interest rates is going to be really bad for savers. I'll tell you what the impact on savers is.
Yep.
So it means less return on pension savings. And my question to you is this.
Yeah.
You worked in the pricing team. You seem like you know what you're doing, right?
Thank you.
What should savers do? We know these interest rates are so low now. What can they do?
Let's take a look at this article from The Economist. Basically, there are 3 paths savers can take. First, they can save less, spend more of their income.
Okay.
The second approach is to set aside more money to make up for the lower returns.
So basically compensate for the reduction in the interest rates.
Yes.
Yeah, okay.
And the third option would be to put more savings into risky assets, such as equities, which would deliver higher return over the long term. If you take history as a predictor of the savers' behavior, it's not a good predictor because there haven't been such circumstances in the history. You would think that central banks would have taken a look into how to answer these questions, but there is not much research, and central banks have not looked at this question.
Oh my God.
Yeah. And Germany has done more on this because they have negative rates, right?
Okay.
And so this whole issue of low interest rates is a big topic in Germany. But even the research they have done is murky, so we don't know. Return has become less important over time as a determinant of savers' behavior. That's what the Bundesbank has found. And a study by Allianz, the insurer, also finds that other factors play a bigger role. As government spends more money on social spendings, for instance, the people save less because they expect the state to help them.
If they end up being unemployed.
Yeah.
Oh, okay. Yeah.
Or in their retirement. So I think this is what we're seeing now as well with the stimulus packages. It is a question whether people will spend more and rely on government to do this all the time. Demographies also affect the savings rate. People tend to save more as they near retirement. But once they retired, most live off their savings. So an increase in the number of retirees could cause the aggregation savings rate to fall. This is exactly what is happening in Japan, actually. This explains the long-term decline in Japan's household savings rate. The historical relationship between rates and the level of savings seem to be weak. And the Allianz study finds that across Europe as a whole, for every 1 percentage point drop in interest rates, saving rates increase by 0.2 percentage points. And the effect is hard to disentangle.
So what you're telling me is these low interest rates doesn't actually impact anything in terms of saving.
They do to certain extent, but there are other factors to consider. Banks lowering rates. They mostly lower rates because of some bad economic news, like the coronavirus. And that's why people tend to save for precautionary reasons. And that's why the household savings ratio goes up. So the effect, it's hard to disentangle whether people are saving more to compensate for the lower returns or just because they are scared of the uncertain future.
Looking at the article, it finishes on, there is no solution to this problem as of yet. Rates are going nowhere anytime soon. Savers' lives are set to become even more difficult. Wow. That's really gloomy. I don't want to end on that.
Yep.
So we've got a few funny articles to finish the show. We're going to start with this one. So a woman ambushes a fiancé at work in wedding dress, demanding he marries her or she's done.
What do you mean she's done?
She's done. She's thinking, looks like I'm gonna have to find someone else. Looks like you're not making the moves I want. So it looks like it has to be somewhere else. And she came with a pastor, which is a preacher, demanding her partner married her right there and then. Obviously, because it was so interesting, the whole crowd gathered. So it's basically like a wedding, but just not necessarily the
Would that be a dream wedding then?
I don't know, man. I don't know.
But what would you do? You're a ladies' man. Come on.
I don't know, Rob. I feel like I want to treat the lady.
Yeah.
And I feel like the right place to do it would be somewhere exotic.
Like where? Nottingham?
Leeds. No, I don't know actually. I need to look into this.
It's an interesting article.
It is an interesting article.
Very interesting.
I wonder if he said yes or no.
Hopefully it doesn't happen to us.
Yeah, like you have to be prepared. He can see him scratching his head thinking, what is going on?
I didn't sign up for this.
Yeah, she says to him, you put this ring on my finger 2 years ago and it's time to do it or get out. He has to make tough decisions here. But I don't blame her. Sometimes you have to let them know.
I mean, we come to the subject of asymmetric information here. We have to send a credible signal.
That's a signal. Yeah? That's a huge signal right in his face. Okay, we have another article here as well. So it reads, dog walks 37 miles home after owner forgets it at service station and is unrecognizable.
When you read that question, the only thing that struck me is, why did the dog walk? He can run.
But, Rob, I would have thought the thing that would struck you is 37 miles is a long way. I mean, I barely know my way to the city. Using Google Maps, I still get lost. And the dog, how could a dog find its way home 37 miles away? You know how far 37 miles is? It's further from Leicester to Nottingham. It's a distance. So kudos to this dog. It got back home. It's just crazy. It must have recognized the route that they've been traveling. So what a great story. And now we're gonna end the show on that note. Thanks for joining us for this session. We really hoped you loved it. We would really appreciate some feedback on what you thought went well, what could be better. Do you think it could be better structured? Just let us know in the comment section below. Also, we would also say that we'd love you to leave a like. We'd love you to subscribe, hit the bell notification, and we look forward to catching up with you guys again soon. And we're here to get down to the bottom of it. Myself, Sam, Rob are going to explore the web, and we're gonna
myself, Sam,
trawling through some articles, and we're going to be exploring the web for some skip. And that's because we're doing some really serious work today.
Are we, Sam?
Cancel that. Me and financial markets, and we're going to be getting to the bottom of the. We're going to be getting the bottom of it.
Okay. Hi and welcome to Markets Rally. I am Robert and this is Sam.
Bro.